Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. Today being the 28th day of January, we have a lot lined up for you. We're looking at a different asset class with regards to the real estate sector. Should you be putting your money there? Where's the demand coming from? Where is the supply? And really, where's the money coming to finance this particular sector? Before we delve into that, let us have a look at what happened yesterday at the Monetary Policy Committee meeting, which is hosted by the Central Bank of Kenya. Now, the Central Bank of Kenya, in a surprise move, did cut the benchmark rate by about 25 basis points. So the official benchmark rate is 8.25%. Now, some people can argue it's neither here or there, but for the cost of credit, at least for existing loans, we expect that this should be repriced slightly lower. In other words, I think you have the headroom to be able to speak to your bankers and ask them to consider whether they could revise downwards your cost of credit. At the beginning of the year, or rather towards also the end of last year, we did see some banks speak to their clients and cut back on their cost of credit. Standard Chartered was at the helm of this conversation with its customers, cutting down the cost of credit for existing facilities, largely based on the benchmark rate. Question is, do you think the banks are going to cut back these rates once again? But more importantly, what were the key considerations that the Central Bank of Kenya governor had put into place when he made this decision together with his committee? Firstly, it seems to us, based on the monetary policy statement, that aggregate demand is a key concern and possibly even a risk factor in as far as Central Bank of Kenya is concerned. By the MPC cutting back the rate by 25 basis points, the hope is that there'll be more cash getting into the economy in way of credit, and people can begin to consume or continue to consume slightly more than they did last year. This is imperative if aggregate demand, which is the total demand of the nation as a whole, is considered. We need productivity to go up. Productivity cannot go up if there's no demand for goods and services. I think that's the key question, or rather the key issue that we are seeing from the sentiments that have been brought about by this statement. The second and final statement that we saw was the fact that private sector credit was up 7.1%. Now, last year is the only time that we did see growth. In the previous years, from 2016, there's been negative growth with regards to credit extended to the private sector. 7.1% was okay as at the end of 2019, but this needs to get to double-digit numbers if it's to have an impact, especially with regards to extending credit to the micro and to the SME sector, which is believed to be the backbone of the economy. Now, the question is, will the banks follow suit? Will they use this new benchmark rate as a reference point for pricing of their new facilities, or will they go with the version of there's no rate cap, the rate cap has been repealed, and therefore they have the arbitrary position to be able to price in credit? That's a question that we'll continue to follow and wait to see what the banks do with regards to the credit that is extended to the economy. Now, looking at the different asset classes, for us today as we look at the real estate sector, so what? The benchmark rate has been cut by 25 basis points. Does that matter? Should it matter? Does that mean we can actually go and buy a bit more in the real estate sector? Do we expect rents to come down? Do we expect them to go up? Well, this is a conversation that we will be having today. And we are joined in studio by Mr. Bernard Gatobu, who is the CEO of Point Properties. Welcome to the show, Bernard.
Thank you, Mbithe.
This conversation with regards to the Central Bank of Kenya,
yes.
Does it hold any water in your sector?
Yeah, in my view, that is all. I think with the cutting of it, it'll help stimulate the growth of our sector in the sense that our clients will be able to probably get affordable loans from the banks. That is if also the banks follow suit. So, yes, according to me, I think there should be some impact from that.
It's something positive.
Yes.
Has there been a continual slowdown in the real estate sector? At least tell us what happened in 2019.
Generally, I can even say maybe even back to 2018, 2019, there's been a little bit of a slow pickup of real estate, especially in the, say, purchase or sale of property.
Okay.
And in my view is that I think it's because of the buying power, basically. The economy as it is, I feel people are struggling.
People are struggling, okay.
So you find people will want to put in their monies in what, say, in an asset or somewhere short term where they can easily liquidate due to the hard times that we are probably facing, but I'm positive that this year things should be well.
Okay, then that would
Yeah.
explain why we've seen a bit of a slump in the real estate sector, because
Yes.
it's a long-term asset.
Yes.
So then how do people manage it? If the real estate sector is a long-term asset, is there
Yes.
then demand? And if there's demand, what kind of demand is there?
Yes, there is demand. Good thing about the real estate sector is that our assets basically they're long-term assets, and if I may say, it's like a safe bet, or you
Yes,
can
a
call
safe
it
haven.
safe haven.
Yes.
So in real estate, you hardly go wrong, especially if you buy in areas that are good. But I would say no area is bad anyway, because it's basically like a saving for future for you. And what I've seen in the past is that there are those properties that one would buy, say maybe at 1 million now.
Okay.
Years later, the items appreciate higher. So I would say for real estate, I mean, it's something that would be worth investing in.
It's something worth investing in.
Yes, yes.
When you look at 2020, when
Yes.
you look at your team, when
Yes.
you engage with your different stakeholders,
Yes.
how are you visualizing the year 2020 when you're looking at the real estate sector?
With 2020 in mind, especially now with the people that we're partnering with now, we are trying to focus basically on the Big Four agenda,
Big Four agenda.
which is something that I think can be of good interest to most of us, whereby there are those incentives that the government is trying to offer developers and other private partners to put up affordable housings,
Okay.
which I'm seeing probably it'll pick up as
As we go along.
There are those that have already been done,
All right.
only that I think the market out there is yet to be well informed about.
Is it?
Yes, yes, yes.
Boma yangu, is that a question that you hear a lot?
Pardon?
Boma yangu, the houses that the government has just built,
Yes,
and then
yes.
they've put them out there, and people are supposed to sort of like apply to get
Yeah.
access to these houses. Is that?
Surprisingly, I haven't had any of those questions from anyone. So
Okay.
that's why I'm saying probably it could
Maybe
be,
it's misinformation.
yes, misinformation. And yeah, basically that.
Okay.
Yes,
All
yes,
right.
yes,
Very
yes.
interesting. So it's sort
Yeah.
of, it's a wait and see situation
That is true.
in 2020.
Yeah.
What are your clients asking you? Are they asking you to, are you getting more queries on can I buy a house? Or are your questions more on can I rent a house in a different location?
Towards the close of 2019, I've been getting inquiries now of purchases,
Okay.
but more or less for the middle income properties, say properties of 4.5 and below, whereby surprisingly the returns are actually good now.
All right.
There's one example, we have some property off Mlolongo. The rents there for a studio apartment, basically we get about 12 to 15,000.
Oh, that's good. And
And
how
the
much
initial buying price of the unit then was 2.25.
Okay, that's a good yield.
Yes,
That's
yes,
a
yes,
pretty
yes,
decent
yes.
yield. Okay,
Yeah.
so 4.5 million is sort of the ceiling with
Yes.
regards to the demand that you're seeing.
Yes.
Are there specific locations that you hear coming up in your day-to-day conversations?
Yeah, areas such as Kitengela,
Okay.
there's Mlolongo, there's what other areas? There's areas like Thika.
Okay. Thika Town.
Yes,
Okay.
Thika Town. There used to be Ruaka, but now Ruaka is a bit on the higher side now, but yes. Then Dindigwa.
Tindegwa.
Yes,
Okay,
yes,
Tindegwa I
yes.
haven't had before actually.
Yeah.
All right, Tindegwa.
Yeah.
Okay, that's very interesting. So
Yeah.
there's an opportunity to buy a house that's priced up until 4.5 million,
4.5, yes.
and you can get, I mean, based on this example, about
Yes.
6 to 8%
Yes.
yield
Yes.
is what we're really talking about. Have the questions on demand, have they increased after the rate cap conversation, or were they more or less the same in the whole of 2019? The repeal happened
Yeah.
in November. So
Yes,
did you
yes.
get more interest after that decision, or was it
If I may say, probably could be 50-50.
50-50?
Yeah, there was a little bit of that, and still not much change, but a little change also
little change.
from that.
Okay.
But I think it's still also because of the hard economic times that we are facing. So people are not really still keen on it. I
Okay.
mean, yeah,
So it's more of some people, it's just good to know.
Yes.
Okay.
Yes,
Let's now
yes.
let's look at the rental market with regards to demand and supply. Maybe we can start off with the residential.
Yes.
I know we see a lot of houses, 2-bedroom to let, 3-bedroom to let.
Yes.
2 years ago, you would not see such signage, or you'd see it for a day and it
gone.
disappears. Like where I live on the same road, there's been this signage November, December, you know, and now it's January and it's there. And I remember 2 years ago when I just moved into that location, you put it up, like I'd literally have to call some, come now, leave your office, come, you have to get this house now. Now it's there. It's like nothing is happening. Is that a trend?
Yeah, it's a trend actually, because as it is, people also cutting down on costs.
Okay.
So you find people are moving to more affordable units. Could be probably the distance could be an issue to them, but I mean they're trying to cut on their costs. So you'll find people probably live from Kileleshwa, maybe downgrade maybe to other locations where could be more affordable for them.
So from Kileleshwa, where would somebody typically go to?
Probably you'll find one will probably go, say, Ruaka.
Okay.
Yeah, or Findigwa.
Or Findigwa.
Yes.
And this would be, you're probably moving from, what would the range be
Say
like?
the range of the rent, say in Kileleshwa, you'd probably be moving from an 80,000 house maybe to a 45, 50,000 house.
Okay.
Yes.
Okay,
Yes,
that's a bit dire, because if
Yes.
these people are not consuming, it means
Yes.
there are also other touch points in their
Yes.
day-to-day consumption that are also being affected
Yes,
in the
yes.
same way as rent.
Yes.
Okay.
Yeah.
Is that a trend you expect to continue in this year?
I'm hoping it will improve, basic now on probably how the economy is. I mean, the political climate seems to be okay.
All right.
So I'm hoping with the as it is now, probably there could be more improvement in future.
Okay.
So I'm positive.
You're
And generally
positive.
this year I'll say it'll be a positive year for us.
Is there a single decision or at least 2 or 3 decisions
Yes.
that you think if they happen, you're like, jackpot, this has been a good year? Is there anything that could trigger more people coming into your office to look for assets?
I think so. I mean, I can't touch any I can't just say any by head, but I think if the economy is well stimulated, it can easily pick up. And by this I mean, even in other industries that I partner with, like say developers and all that.
Okay.
We have others that actually work for government or work for other private institutions. But now, because of the lack of payment, probably by counties or by a certain private investor or something, equally affects the development of the same. So if say if the economy is well stimulated, you'll be able to pay your bills. You'll be able now to.
Everybody gets a piece of the pie.
Yes.
Okay.
Yes.
Developers.
Yes.
Everybody says, or rather, yesterday we had a question on where would you put your money?
Yes.
And the responses that we got online were affordable housing.
Yes.
And I know it's one thing to say affordable housing.
Yes.
Please draw it for us or help us understand. When I say I want to become a developer, assume what's the minimum that I can build? Maybe 20 units for it to make commercial sense, or 12 units?
Depending now also, of course, on the pricing.
Yes.
I would say we've done even investments of what, about 16 units and below.
Mm-hmm.
But then with ranges of about selling prices of about 7 to 10 M.
7 to 10, and then what if you're going to sell at 7? Say 10, that's 160 million.
Yes.
What's the cost like, excluding land? Just the cost of labor and the cost of putting up the 16 units?
Say for one unit, say for the 7.1, say, one specific unit that we sell at 7, probably you'll find the construction cost will give you about 5 M.
5 million?
Yes.
Wow.
Yes.
Wow, that's a lot of money, because it means at least for 10 you need almost 50 to 80 million.
But you see, it also depends on the finishing that you're doing.
Okay.
Yeah.
So this is 7 million is a bit steep.
Yes.
So maybe if we were to say we want to sell it at the 4.5 million, which is where you're seeing the demand price start, would we be correct to say it would cost us $1 million, $1.5 million, $2 million maybe?
Yeah, maybe 2 million,
Maybe
but
2
then now
million.
that means you'll cut also on the size.
Ah, okay.
'Cause
So,
also
so 2
size
to 3
affects.
million.
Yes.
2 to 3 million.
Yes,
So
yes,
2 to
yes.
3 million. If it's 10 houses, that's already
Yes.
20 million.
Yes.
If it's 20 houses, it's 40 million.
Yes.
Where do these people get money from?
Some are funded by private investors, some from their own pockets,
Okay.
loans, and at times we also usually take deposits also for
Okay.
off-plan units, so which usually also helps fund some of the projects.
Okay.
Yeah.
I want to go back to this 40 million because I'm
Yes.
trying to see what the case there is.
Yeah,
So
yeah.
I wake up today as Mbithe and I say,
Yes.
all right, Bernard, you have a lot of experience in this sector.
Yes.
I have a piece of land
Yes.
that I've already bought and I think I can come up with 20 apartments.
Yes.
Then we do the drawings, the pricing,
Yes.
etc. Then we come to a price estimate of maybe 40.
Yes.
Call it 50 million just to be on the safe side.
Yes. Yes.
Okay. Now, where would you tell me to start? Because if I come to you today, I'm like, okay,
Yes.
I have land.
Yes.
We could get a plan. I have
Yes.
an idea.
Yes.
That's about it. How do I even start?
I think the first thing will be what we usually advise guys is that, say for instance, if you already have the land, you've already bought the land, so you've done the bid till up to buying. So from there, before you start construction or decide on what you want to do on the particular piece of land, I will advise one to do a feasibility study.
Okay.
Get to understand the kind of market that is there and the need that is there. Then now think it through and then see how to go about
How
it.
to go about it?
Yes, yes,
Okay.
yes, yes.
But still, 40 million. How
Yes.
long would it take me to sell, in your experience? So some of these projects that you
Yes.
have done,
Yes.
if we break ground today, January
Yes.
2020,
Yes.
when am I likely to complete and maybe start selling? Does it take me 2 years?
Yeah. An ideal construction basically usually takes between 2 to 2.5 years.
Wow, that's the next election.
Construction, yes. But depending also on the available funds and also size of the project,
Yes.
it could even probably take a shorter period. But most of the projects that we've seen take about 2 to 2.5 years.
2 to 2.5 years.
But even at times you might find the units are already sold out by then.
Okay. Full cost.
Yes.
That would be fantastic.
But some could buy at full cost, but some could actually do installments so as towards the end. But yes, you could find units actually sold basically all.
All of them.
Yes.
Okay, that happens. I mean, that's an excellent way of
Yeah.
funding, because if you go the bank way,
Yes.
the moment the money comes out, the interest and principal
Yes.
is due tomorrow.
No, the good thing is also the banks, they usually give you like a moratorium.
Okay.
So you could, if you've negotiated well, they could give you maybe an extra year off before you start paying the loans.
Okay.
Which now also helps you now in trying to push as much sales as you can before you start paying back your loan.
Your loan.
Yes,
Okay.
yes, yes.
Are the banks open? Because when you look at the statistics that come
Yes.
out of either the Central Bank or the Bureau of Statistics,
Yes.
the amount of credit that is going to real estate sector has just been coming down over time. So it feels like the appetite for that particular segment, it's considered high risk. Is that?
That is true. Actually, like I think you check the papers almost every so
Every day,
often. There are
yes.
guys who are being auctioned and all that. So yes, it's something that banks are shying away from.
Yes.
But other private institutions are trying to work towards that, because now there are those that are doing now like the rent to own concept,
Okay.
which is something now that is also equally coming to bite the banks. Because
Oh,
with that
right.
option now, you can be able to structure your payment vis-a-vis whatever rents that you're able to pay.
Okay.
Yeah.
Okay. It sounds all well and good, but I struggle to see where the demand and the appetite for these units comes from.
Yeah. Most of the demand that I've actually gotten
Yes.
is actually from investors.
Okay. Local
Investors, yeah, local and foreign.
or foreign? All right.
But then, if I may say, they're well established.
Okay.
That is, by this I mean most of the investors that we are getting, or the guys who are buying, are mostly people who already have a good economic base.
All right.
So yes, you might, the demand, say, from the middle class or lower class is a bit lower, of course. But now with the bigger guys, I mean the guys with the bigger pockets or vast wealth,
Okay.
are able now to purchase those units and then probably now rent them out to guys.
I feel like I need to be wealthy to become wealthy in the real estate, but I don't have the money to start off. So how do I make wealth in this sector?
Basically, just start small.
Okay.
And by this, I mean, there are those parcels or properties that you find are affordable. Now, for example, like the units that I was telling you about in Mlolongo, when initially the project had started, the units were going for 2.25.
Okay.
2.25 is a loan that someone can easily get.
Yes.
For a car.
Yes.
Say like someone works in a bank.
Okay.
But then now you find the particular person in the bank will rather buy a car than go and purchase a unit.
Okay.
Yes.
Okay, that's
and
true.
Some of the things, I mean, the judgment I think around it was that they will not want to own a studio, because you see, even when you want to buy something, you find you want the biggest out of it, and for it to be big, it becomes expensive.
Yes.
So we actually were trying to do something that is sizable enough for someone in the low end or middle class to be able to afford. But yeah.
Okay.
Yeah,
interesting.
yeah,
I like that analogy. So don't buy your BMW today. Buy a studio or apartment. You don't necessarily have to live in it, but it does give you an annual return.
Yes.
And what is the occupancy in this particular project? Is it 100%? Is it?
Especially for the studios, we've had about 100%.
100%.
Yes.
So then the risk of me not having a tenant who can help me pay back my loan is it's negligible.
Yes, it's something negligible.
Okay.
Yes.
Now another thing that keeps coming up on this conversation.
Yes.
Fine. Perhaps I'm getting 8% yield on this asset. So I've put in 2.5 and I'm getting 12,000 a month.
Yes.
Actually, that's a 10% yield.
Yeah, it's about 10%.
It's a 10% yield. So that's a 10% yield.
Yes.
When I took the credit, I probably got it at 13 or 14%. How do I bridge that gap?
Wow, that's a good question. For the gap, I think ideally for most properties also usually have to do a down payment.
Okay.
So at times if you're able to raise a better or a bigger chunk of down payment initially, that can also equally help reduce on whatever you're meant
the debt that you have to take out.
The debt that you have, as much as the percentage is still there. Other options now probably will be increase your rent, which I mean are still a bit difficult. So at times you might also have to probably diversify.
Okay.
Have something else now that, or reinvest the 12,000 per month into something that can be able to multiply into something extra.
Okay.
That can help you.
Is there anything extra fund? You know? Or are all your investments in the real estate sector?
No, maybe I think one can do bonds.
Okay.
I think also in the same industry, say like for the studios, one can do a furnished unit. A furnished unit now can actually probably get you more than an unfurnished unit.
So for Airbnb?
Yeah, basically like an Airbnb.
Okay. Yes. How feasible is this? I hear people talking about it.
Yes.
You're in that space. Is Airbnb competing for the same space that you're trying to rent out on a monthly basis?
Yes and no.
Okay.
Because Airbnb equally also competes with the hotels. So for us, I don't think it's really competing as such with us, because we're in the same industry, same field with them. So yeah, I think it's something that is picking up, especially in areas close to town. Those are areas that are actually good for such investments. So that's
South B, I want to presume?
You can do South B, you can do Yaya, Kilimani. So those general areas are good anyway.
But Mlolongo, Ruaka?
Mlolongo equally you could.
Is it a bit far?
No, it's not far. Actually, like say like Mlolongo proximity to airport.
Oh yes, that's true.
So you could get clients probably who would want something not so far from the airport, but something also affordable for them, probably a week stay or so.
Okay.
Whereby you could be charging about what, say 3,000 a day.
Then okay, that's
in
good.
A week you have, I mean, in 3 days you already have your 9,000.
Already.
Yes.
So if you get somebody who stays like two guests who stay for 5 days each, and you're sorted.
Yes.
How do people manage security then?
One way of that, through Airbnb or what?
Yes, if it's, for instance, if I decide to go the Airbnb way, you know, when I have a tenant, this is someone's permanent or semi-permanent home, right? So it's very easy to control. But if I have somebody who's coming in today and then leaving tomorrow, then how do I manage that? How do I manage the security of the things that I've put in the house?
So basically for Airbnb or basically furnished units, that one you'll probably have to have someone on ground.
Okay.
Probably have an agent on ground, or probably have a house manager, someone basically who can be able to do the check-ins and the check-outs.
Okay.
Yes,
That
yes,
makes
yes,
sense.
yes.
Okay, fantastic.
Yeah.
Okay, I think let us take a quick break and look out for the NSC closing bell. We will be back shortly. Engage with us. That's Metropole TV on Twitter. Would you invest in the real estate sector? Have you heard of some interesting investment nuggets that you want to share with the rest of us? We look forward to your commentary, and we will see you in a few.